Welcome to Wealth Made Simple with Shaz, where you'll learn how to master your money through business, property, and tax-saving strategies. Your host has collectively helped his clients make tens of millions of pounds in additional profits through these strategic approaches to business. Introducing Shaz Nawaz, an award-winning chartered accountant, property tax expert, entrepreneur, and property investor.
There is a property strategy known colloquially as NMD or JVing or...
What's an NMD though?
Group profits in, and it's all amounts to the same thing. It is a joint venture, no money down. And just to caveat, when I say no money down, understand that no money down doesn't mean no money involved. It just means none of your own money. So if you've got... a wealthy friend or, 7 or 8 friends that want to go in with you and you're happy to do business with, then perhaps between all of you, you can have enough money to put in for an investment property.
So you're telling me if I find a property deal, I can go to people and say, I've found a deal here which can work for all of us. You invest all the money and I'll do all the work.
Absolutely. You do all the work, you do all the project management, as it were, and then depending on how your personal relationship with them is, how the business is structured, then you split the profits from the deal however you like. So some people might take 50-50, other people might 60-30.
Which we'll talk about. So this links in with what Fayaz Rasool asked last week about having a consortium and kind of making it halal, so to speak. So there's no interest involved.
Absolutely.
But why would anybody give you money, Kieran?
Whilst we're on that subject, just to caveat, we're not financial advisors.
No, we're not.
And we do not give financial advice.
We don't.
If you want advice in that sort of area, go and speak to someone who is trained and a professional in that profession.
Or anything on Islamic finance or interest or riba or anything to do with that.
Exactly that.
We have our limits.
Yeah, I wouldn't want to mislead people, so I just thought I'd put that out there quickly. But yeah, following on from that, sorry to sidetrack, but I felt that's necessary to highlight, as we do every week.
You always spoil it for us.
I know.
And I tolerate it.
You do. You are a very tolerant person, and I appreciate that.
But I have my limits, just so you know.
And I appreciate you.
Yeah.
But yeah, you could, if you had enough people with enough money, you could, without interest, purchase a property, refurbish the property, either rent it out or flip it on, or,
What does flip mean?
Flip.
Does that mean when somebody gets angry, they flip?
Absolutely. Yep, that's exactly what it means.
Okay.
It absolutely does not mean that you've bought it at one stage and then you flip it up to market it out at a higher value so you make some money in the process.
Money from it down.
No, absolutely. Doesn't mean that at all.
We don't want to do that, do we?
No. Yeah. Making money is not what we're...
It's a bad idea.
Bad idea. Terrible idea.
How dare you?
I know. But yeah, so...
Well, you could flip burgers, couldn't you?
You can flip burgers.
That could be flipping as well, so...
Yeah, I mean...
You could be a flip-flop as well, couldn't you?
I mean, you could be a flip-flopper. Yeah. Isn't that a shoe?
No, I've got no idea, mate.
It's like a sandal, but it makes a funny sound.
It has a different name in the world of politics, but I'm not going to go there tonight, or any night, by the way.
No, really?
No.
No, you don't want to flip-flop across parties?
It's been mentioned, by the way. Back to the world of property.
Back to the world of property. So you could theoretically, however the split is, I mean, if you split something 50-40, 20-10, if you've got 10 people and everyone takes 10% each, that's fine. What I will say about, splitting out your profits and stuff like that, if it's a good deal and the deal stacks up and you're going to make money regardless, but you can't afford to do the deal yourself, so you need external help to do it, and you can get that help, and they demand, 70% of the profits and you get 30, 60% of the profits you get 40. They're not keen on a 50-50 split. Well, is 40% of a profit better than 100% of nothing?
Yeah.
And I think that is worth mentioning, because a lot of people get hung up on the, oh, well, they're taking me for a ride. They're taking more of the profits than I am. They're getting more of the money out of this than I am. Well, okay. if they weren't involved, would you be doing the deal?
Yeah.
And if the answer is no, I would say negotiate as hard as you want, but fundamentally, a little bit of something is better than a lot of nothing.
We're going to come back to it in a second because we've got Faisal who's always listens to our show, by the way.
Oh, hi.
He always asks really good questions. Assalamu alaikum, Faisal, and thank you very much for asking a question.
Assalamu alaikum.
His question is one that we've heard, obviously, before, and it's a good question, by the way, because it shows he's thinking about stuff, which is, when flipping, do you use the same company or keep it separate from a company with your buy-to-let properties?
Personally, I would keep it in a separate company structure as well. But we'll get onto that another day. I don't think we've got enough time to go through company structure, but we should at some point.
Well, I'll make a note, shall I?
Yeah,
I'll do that.
You take it. There's a good man.
Yeah. I'll host the show and I'll make notes as well.
Okay, cool.
I've got you covered.
Keep it in a separate structure, because from my experience and from what I've learned, a lot from Mr. Shaz himself, is that a buy-to-let property or buy-to-let portfolio, if you've got more than one property, actually comes under as an investment business.
Yep.
And flipping is a trading business. And there are a lot of different pros and cons to a trading business versus an investment business. And I suggest everyone do their own research on that. We've done some videos on that sort of thing. Mm-hmm. You know, so there's a lot of information out there to digest. But fundamentally, there are more benefits overall to a trading company than there are to an investment company in certain areas.
Yeah, because obviously the government wants to incentivize people to trade, and generally speaking, there's a particular persona or connotations people have towards those who are investors that seem to be wealthy people who are reasonably well off, have lots of money, so there aren't as many tax advantageous benefits for that type of sector as there is in terms of having a trading business. So there's a lot of tax reliefs, exemptions, allowances available to a trader as compared to an investor. So first, to answer your question, a buy-to-let property portfolio holder is seen as an investor, whereas flipping is a trade. Therefore, you get things like entrepreneurs relief, which is now called business asset disposal relief. You get investors relief, which we might talk about all of these things one day.
You get AIA.
That's right. Yeah, that's right. And you get
different things like that.
Allowances and all those kind of tax benefits. But you're better off keeping it in a separate company, because when you're flipping, you're usually adding value to a property, which means you're getting work done to it. And then you've got VAT, you've got CIS, the construction industry scheme, all that type of stuff, which you haven't got in your buy-to-let property portfolio, generally speaking. So it starts getting complicated. So first, it's better to keep it in two separate companies. But what you could do, if you wanted to, by the way, is have a holding company on top, which controls everything. So you have it in two separate companies. But then we go down the path of having a trading group and an investment group. Again, it's probably worth you and I, Kieran, talking through that one day.
Yeah, absolutely.
Just to give people a bit more clarity. But to keep it really simple, President, to answer your question, is
two separate companies.
Yeah. And simply because, if nothing else, your buy-to-let portfolio, generally speaking, let's say it's owned by you personally, then using what Kieran just shared, you're asking 10 people for £10,000 each. Now they've given you that money, they want to be shareholders. Well, why do you want to give them shares into your buy-to-let company when they don't own any of the buy-to-let companies? Or properties. So therefore, have a separate company which has that property that you're going to flip.
It ring fences
away from your buy-to-let. Yeah?
Ring fences it. Keeps it separate.
And then there's a further risk, and that's a good point you make, because your property that you're going to flip, you're going to do work to, has a high element of risk, because you've got contractors, subcontractors, work going on to it, where your buy-to-let is pretty vanilla, nothing going on. So why do you want to jeopardize that? If something goes wrong with your building work, and all of a sudden you can't pay your supplies for some reason,
whether it's COVID, over budget, over time, or something happens,
whether there's something else, okay? And then you're going to basically put at risk all of your buy-to-let properties. Well, that'd be a bad idea.
Because if they're all in the same company, they're all liable.
Exactly.
If you ring fence it and just keep it as that property versus that's a separate company, don't worry about that.
Limit the exposure.
Limit your risk.
Aren't you glad that Faisal asked that question, and enable you to answer that question.
Absolutely.
In the way that you have.
I love
Thank you, Faisal.
I love our questions, and I love when we get engagement from our listeners,
Good.
because that's fundamentally what we're here for.
Engagement. That's right.
We're here to help other people out.
So you've got somebody who's got some expertise in property or has an interest in property, although they've educated themselves in property, and they found a deal. Let's just say that they found a property that they can add value to by extending it in some shape, way, form, act, or manner. And then they think we can sell this and make, let's say, £100,000. Just keep the numbers really
keep the numbers really
as
easy.
you know, some of the numbers have been really big for some of the people that we work with. But let's say £100,000, and then you go but to buy that property, you need £300,000, and then to redevelop it, you need £200,000. So you need 500 grand in total. And you're saying, okay, depending on what those people's personal preferences, we may need a further loan, or we may just need them to input all the cash. That doesn't matter. Let's just say you need a sum of money. So then you would go and talk to some people and say, I have a project here for you. Here's the projections. Here's how much it's going to cost in terms of buying it, plus legal fees, stamp duty, possibly planning, all that kind of stuff.
All the stuff
and then
that goes
to
with it.
refurbish it, redevelop it, and in the end, we're going to spend this much money. Let's call it 500 grand, for example, in total. We're going to sell it for £600,000. We're going to make 100 grand profit. Just to keep it really easy. 500 grand all in, including all the fees to sell the property. Why would somebody believe you, Kieran?
Well, because the numbers are there.
Yeah.
And it's not a matter of a flight of fancy or anything like that. It's not too good to be true, because there are risks involved, and it's something that I will, if it sounds too good to be true, generally it is. But realistically, this isn't without risks. There are risks involved. It's not all on the up and up and up and up and up. But that's business.
So what you're really saying is they can then take that document that you've prepared, which we call an appraisal.
Yeah.
And then sense check it.
Yeah,
and say,
absolutely.
Let's get all these numbers here, and let's go and speak to contractors, subcontractors, our electrician, our plumber, speak to lawyers, check up about the stamp duty, land taxes, to make sure that these numbers are accurate and reasonable.
Yeah, absolutely.
So once they've done that, I think, okay, what the numbers that Kieran shared here pretty much are what I've established by speaking to 2 or 3 experts in every single area. These numbers work. And we're talking today about no money down. And in very simple terms, this is when you want to, you found a deal, and you're looking to, and the deal stacks up, and all the numbers add up. And we should talk about what those numbers should be one day, by the way, Kieran. So
Absolutely.
Because people don't know what goes in an appraisal sheet. And then you find somebody who's looking to invest, and then they go and find some investors so that they'll do all the work. And by the way, this is quite this is an Islamic finance concept. So you got something called Mudariba, and in that you have that's a financial instrument. In that you have 2 entities. One is called the Rabbul Mal, the investor who puts the money in, and then you've got the Mudarib, who is the person with the expertise. Hence why it's called Mudariba. So you have investor and the person with the expertise person, or the people obviously use their expertise. The people with the money, called the Rabbul Mal, invest their money, and you both enter into a joint venture agreement to make money without any interest involved. So this is 100% permitted within Islamic finance, and it works extremely well. But obviously within more westernized concepts, it's called no money down. Exactly the same thing. So you were saying earlier, we found the project, shared the numbers. Someone's gone away and sense checked the numbers, and the numbers add up.
Yeah,
they're fine.
And we were just saying that's the nice thing about the way this works, is that it's not a fly-by-night operation. Someone can take a look at the numbers, take them away, and actually check them against industry standards, against the area that you're investing in, against the price of the property, against all of those points of potential failure in the deal. They can go away and check. So they're not investing blind. You're going to them going, this deal stacks up. These are the numbers I've got. Feel free to check them, because you obviously have the finance. I have the expertise. We can come to a deal, and that works for everybody. by all means, check the numbers, make sure I'm right.
So I've gone away and done that, and I say, totally agree with your figures, by the way, Kieran. They add up. I've spoken to a couple of quantity surveyors. I've spoken to sales agents. I've spoken to my accountant, and they're all saying these numbers add up, and they are pretty spot on. But my concern is, I don't know whether you can deliver or not. So how would you go about trying to convince me that you are the person to deliver the project?
Well, I mean, that all depends on your own personal history. I mean, for someone like yourself or myself, you know, I can take you to projects that we've done. You know, here, this is what I've done last time. This is what I've done before. This is what I've done before. Yeah, I've got a portfolio of things that we've already done. So that should give you some confidence that I do know what I'm doing. If I don't have that portfolio, then this does become slightly harder. With, you know, and rightly so. But
You about to say with the passage of time, weren't you?
no, it doesn't. It doesn't get harder with the passage of time. It gets harder to convince someone that you know what you're doing if you've never done it before.
So how would somebody go about doing that, do you reckon?
If someone has got
So you've done 0 no money down deals.
0 no money down deals, okay. If I've got 0 no money down deals behind me, do I have? Are we saying 0 property deals?
You've done property deals because you know about property.
Cool.
You've done no money down deals, and now you're asking other people for money. And maybe you've done a flip, maybe you haven't done flips, maybe you've done commercial to residential conversions, maybe you haven't.
So in that regard, I would probably.
What are you going to offer me to address that concern?
So if I've got to address that concern, then I would be like, well, I've done these flips, I've done, you know, or not done these flips, I've done, you know, this is my expertise in terms of whether it's project management, whether it's you know, history of working within property, whether it's, you know, done estate agency, whether it's looking at deals, whether it's deal sourcing, any of those things, any of the courses that I could do,
Building your credibility.
Yeah. Any of the courses that I could do. Do I have a mentor? Do I have somebody that can show me the ropes? All of these things factor into it. But also fundamentally, you can also go back to them and go, I appreciate that I've got no credit line with you, as it were, in terms of my experience and my expertise.
No currency.
Yeah. So how about we split the deal 70-30?
So offer them more
Offer them
for taking
more
a bigger risk by having a leap of faith.
Exactly that. And then maybe you guys, you make money on that deal works out well. You go to them for the next deal and you say, okay, we did 70-30 last time. It worked out well for both of us. But how about we do 60-40 this time, then 50-50? And you build up a relationship with people that way. And because as I said right at the beginning of the show, 100% of nothing is still nothing. 30% of £100,000 is £30,000. Okay, yeah, somebody else is taking £70,000 as profit, but you know what? They might be taking 70 grand, but they took a risk on you, and you've got to pay that sweat equity into a deal. You've got to prove yourself.
So a piece of the pie is better than no pie.
Exactly.
So in terms of, we were talking about no money down, so you have, and a person who's got the expertise, doesn't have the money, finds a good deal, does a deal appraisal, finds some investors, whether family, friends, associates, or somebody they don't know, share the figures with them. They go away and check those figures, verify them, are happy with the figures. They're then saying, I like the figures, I like the deal, I can see how it works. I'm not too sure about you, so we can't do a 50-50, for example. Doesn't matter what the ratio is, 50-50. I'm not comfortable. So you're saying, because you're taking a bigger risk in me, because you're not comfortable, I'll give you 70% of the proceeds of the profit. I'll keep 30% just to prove to you I know what I'm doing. But in future deals, that's going to change. This is just to build your confidence.
Absolutely,
and demonstrate to you my credibility.
Yes,
right?
yeah.
So that person says, absolutely, okay, because I'm taking a bigger risk, 70% seems like more like something that's worthwhile doing. And then you obviously do the deal, complete it, sell it, and split the proceeds, and hopefully go back to that person or somebody else, and then obviously work on future deals. And I guess in between that, Kieran, you want to build up your portfolio, so take photos, make videos, all that type of stuff, so you got the evidence to show the next lot of investors, whether the same people or new people, how the whole thing works.
And that you know what you're doing.
And then Absolutely. And then, but what if I'm saying to you, I want regular updates every week? I need you to send me some information about how the deal is working, because I'm concerned. I'm giving you so much money, and I want to be sure that you're investing it properly and my money's safe.
For me personally, that doesn't work. I would say, realistically, we're dealing with property. This is not a quick game.
Get rich overnight. Or
Yeah, it's not get rich overnight. It's not a quick game. Yeah, an average flip, even if you know what you're doing, could take, a year. So that's not a quick turnaround. And understanding that, I would say I'm happy to give you quarterly updates. My projections on this project are, I don't know, say a year, 18 months, if we're doing a bigger project. 18 months, maybe even 2 years. I'm happy to give you an update every 3 months, 6 months. I'm not going to keep you out of the loop. You are welcome to come and, see what's going on, ask around what's going on. I've got no issue with that. But if I spend every week compiling an update for you on a weekly basis, I'm going to be doing nothing else, which means the work won't get done, which means we'll fall behind, which means the project's going to cost more, it's going to take longer, and we're both going to go away unhappy.
So we're both doomed for failure. So how long does an average flip or a commercial conversion take anyway?
In my experience, an average flip, if it's a smaller house, smaller property, we're probably looking. You can do a flip in comfortably 9 months, 6 months if you're really, really pushing it and really constrained. But
So if you've got a good system in place.
really good system in place. But also, what that doesn't factor into and can't factor into is how long it takes to sell the property once you put it back on the market. And you do need to allow for that.
And what if we don't want to sell though? Imagine we both agree that we're going to sell. At the end, I say to you, you say to me, or whoever the parties are, let's keep the properties or the units. Is that workable too?
It depends on your business structure. It depends on whether you are doing this in a limited company, whether you're doing it sole trader, whether you're doing it as a...
But is it a viable option to talk about? Maybe at the end, because things have changed, economic climate's changed, interest rates have gone up, you can't get the finance in place. You can't sell them for what you thought you were going to sell them. And because interest rates have gone up, the people who were interested in buying can't afford to buy them anymore. So you're saying, let's just refinance ourselves because we've got the margin there to use that as a deposit, even though we're not paying a deposit per se. So we're borrowing 75% of the value of the property, and the other 25% is the uplift in the profit that we've created. So it won't cost us any money in terms of getting the refinance because we've got the equity in place. Apart from paying the arrangement fees and the legal fees, let's keep the properties and generate some rental income. And in 3, 4, 5 years' time, or whenever, we can sell the properties. And in the meantime, we've generated rental income. Is that a workable model for some people? As in, it's not the end of the road if you can't sell.
It's not the end of the world if you can't sell it. No, and just like you say, you can rework it like that if you want. We're getting into the deep bones of business structure and stuff.
Of course,
Intention to sell versus intention to keep, versus,
Which is complicated,
which overcomplicates things. But if we gloss over that and just tell our viewers that is something to be aware of, but go speak to a professional about that, they'll tell you all about it.
And our listeners.
Yep. What did I say?
Viewers.
Oh, I'm so sorry. But we are on the streaming platforms.
We are.
I do apologise to our listeners out
We've
there.
got two sets of people.
We do.
Audiences.
We have our viewers.
Just listening to them.
Yeah, absolutely. But yeah, fundamentally, if you want to switch to holding on to it, you can. And for me personally, I prefer to hold over selling from the outset.
And why is that?
Because I prefer the cash flow that comes with having this system in place. So,
and you don't pay the tax because you're not selling anything. So you've saved that tax for now. Push it down the road for bigger capital appreciation, which makes
a lot of sense.
And you perfect sense. Yeah.
And I mean, if you look at it from a investment point of view from the outset, if you've got enough money in the deal, in the profits, on the uplift in value, to refinance, to get all of your initial investment money out, for some people, if you do the deal right, it's like having flats for free.
That is the place to be, isn't it?
It absolutely is. And I'll just run you through some numbers very, very quickly. If you, for example, bought a commercial property for 200,000, you spend 200,000 refurbishing it into 10 flats.
A number of flats, yeah.
Yeah. And then you then get the flats revalued, and they're valued at 600,000 all told, all in, all 10 of them. There'd probably be more than that. There'd probably be about 80 grand each, but call it 800,000 then.
Well, 600 grand, and you want to refinance at 75%.
75%.
You got 450,000 pounds by way of finance.
Yep, which means you get your 400 grand out that you put in initially, plus 50 grand spare. That's in your pocket. Thank you very much.
You sorted.
And you've now got these 10 flats that you can rent out, £600 a month, £700, whatever.
Yeah, the other 150 grand your deposit or equity.
Equity,
you
deposit.
150 grand back, pay everybody off, and you got 50 grand you can divvy up as well.
Yeah, that you can divvy up and do as you will
take
with.
a smaller mortgage, so you got less to pay in terms of interest or repayments, and then today you're creating more monthly capital cash flow.
Exactly that. Whichever way around you want to do it. But the point is that on that scenario there, very quickly, very back of a cigarette packet style.
And you've got a share in 10 flats.
You've got a share in 10 flats for free.
It seems too good to be true, Kieran. Does that really work?
With the right deal, the right amount of work, you've got to put in the sweat equity. You've got to have a strong mind to get through the trials and tribulations, because there will be hiccups, there will be problems along the way. Something that you taught me very early on was there are two things that are almost guaranteed in every deal.
It's going to take you longer than you think it is, and it'll cost you more than you think it's going to cost you.
Exactly. So that £50,000 bonus that we were just discussing might become 20, might get wiped out entirely.
Who cares?
But who cares?
You've got 10 properties.
You've got 10 properties, and you've got all your money out.
Back. Yeah. If someone said to another person, here's 10 properties, pay nothing for them, just make the mortgage repayments every month, and the rent's going to cover them, have them for free. I mean, who'd say no?
Who'd say no to that?
The majority wouldn't, would they?
And
same thing.
And this is the style of deal that I have seen people do, is they've got joint venture finance to fund the cost. They've done a deal just like that with the extra 50, and they've gone to the investor, okay, here is your £400,000 back, and here's
a share of the equity and the properties.
Well, no, they've taken the flats themselves on themselves, and they've gone, here's the £50,000 bonus that we got from refinancing. You now have nothing to do with this. See you later. This is now, and so suddenly, okay, you've got no bonus out of it at the end of it, but the UK, you've got 10 flats.
You've got monthly cash.
You've got monthly cash flow.
And then you go back to the investor and say, do you want to do
the similar deal again?
Why wouldn't they?
And suddenly they've gone, well, I gave you 400 grand and got 450 grand back.
In 6 or 9 months or whatever?
Yeah, 6, 9, 8.
Nice. Let's do it again.
Let's do it again. Let's do it again. And you find with a lot of wealthy individuals who have that sort of wealth, they do tend to go, well, I know we did 400 grand last time and I made 450. Well, actually, I've got a bit more spare.
Let me tell you about it. Yeah.
Yeah, let me tell you about this.
I've got 800 grand. Yeah,
800 grand, 900 grand.
Because no one tells you up front how much money they've got. They're just giving you a bit just to dip their toes and just see what you like. And once they think that you're a safe pair of hands, they say, "Oh, I've got some more where that came from."
Yeah, and let's upscale it. So suddenly you're now looking at deals of £1 million plus, and £1 million plus deal can generate serious retirement level cash flow.
Yeah, absolutely. Because as you go up the ladder in terms of the value of the property, there's less competition for it, isn't it?
Yeah.
Thanks for listening to Wealth Made Simple. You can follow and contact Shaz on the Facebook pages Entrust Property Tax and The Profits Wizard. You can also find Shaz on LinkedIn, YouTube and Instagram. Alternatively, email him at shaz@aa-accountants.co.uk. Build your wealth by mastering money.